Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, June the 1st. The year's 2021. Let's talk trading. Hold, fold, or bank. These videos are for educational purposes only. Your results may differ from mine and from Walmall. We've been talking about doing this video for a while. So we have to tell the boys and girls and non-binary traders out there how we decide to hold, fold, or bank.
Yeah, that's always the question of the day, isn't it? You take your trade and where do I get out? And hopefully you got some type of exit strategy before you even get into the trade. But sometimes things happen where, you know what, the plan's off the table. It's sort of like, I think it was Mike Tyson went and said, everybody's got a plan until you get hit in the head, right?
Right.
And that's the truth a lot of times with trading. You have a plan to get in, you got a plan to get out, and you make a mistake and compound the mistake, and next thing you know, you got one thing after another, and you got issue after issue, challenge after challenge. But yeah, it always comes down to it. And the thing is, I'm just talk about myself here for a second. I'm not a gambling type person, and I know our boys in England, they actually classify Forex trading as spread betting, and that's how it's actually done from a tax basis over there. But I don't look at it in terms of betting. That's just me, because I want to go and have things on my side, and betting just seems to me that at least in what I've seen, betting always seems to be going against you. But at the same time, there's a lot of things that really do transfer over. This whole idea, I get into a trade. Okay, I'm in the trade. Now what am I going to do? Do I stay in this trade? Do I hold it? Do I go and get out? Let's say the trade goes against me. Do I just fold and get out? Do I just quit? And just say, okay, that's my exit point. I'm just going to take this small little loss or this big loss if I held it already, or do I bank it? And that's the decision that we all face every single time, whenever we get into a trade, and so how do you make that decision? Well, hopefully, okay, you're able to, and I alluded to this in the very beginning, you have a plan. Because if you have a plan, then there's really no thinking involved. You just follow the plan, and if the plan tells you to get out here, you get out there, it's just that simple. If it says that, it's time to fold, you fold. If it tells you, hey, it's time to hold, we hold. And if it tells you it's time to bank it, bank it. That's just what you got to do. Easier said than done, because, that psychology goes and plays in again, because hey, look how it's moving. Look at I'm up X, I'm up Y, I'm up the 2X, and that starts to play, and the next thing you know, it starts to come back down on you. Do you just get out there, or do you hold it? Hoping that it's going to continue on its run up. Are we outside our plan? And those are the questions that you have to really go and ask.
Well, I mean, to sum up what you just said, it sounds like you need to follow your exit playbook.
That's exactly right. You just got to, it'll take a whole lot of stress out of the market. That's for sure. It'll take a whole lot of stress out of what you're doing, and the thing is, I think what happens is, do I have an exit playbook? Is it written down? For me, yeah, it absolutely is. Do I have it in front of my face all the time? No, and I admit that, just to be transparent. And the reason why at this point, though, I think, is because it's written down in the most important place, and that's in my brain. And I really don't go and violate that very often. Do I violate it? Sure. You can call me out, TRO, on that, because you've seen me violate it. But for the most part, I really don't, and because of that, I'm able to stay in the black as opposed to going into the red.
Yeah, well, one of the reasons I've been wanting to talk about this is because a lot of times, we'll get into a trade, and let's say you're up a pip, and after commission or spread, you might only be up like 2 points or something, but you're in the trade, you're looking at it, and it's just like this isn't moving. It's like, when we say our 1 Mississippi, 2 Mississippi, 3 Mississippi out. Um, and that's not really written down, and so we don't have like a strategy to, or a written plan to say, if you're up, a net 2 points and price, stops, that you want to take the trade, because you're thinking, well, based on statistics, I should be able to get 4 or 5 pips out of this trade.
Yeah, you're right. And the thing is, when we do that, I think what we're doing is we're not really even looking that much at the pips that are on the table. We're really looking at, okay, what is price action telling us right now? Price action has come to, price has come to a halt. It's not moving one way or another. And in a lot of ways, what that tells me in terms of, especially with a lot of trades that we take, that are statistically based, for whatever reason, the trade just didn't pan out. I'd rather go and lose 2, 3, 4 pips than have the thing, because it didn't pan out, turn around and let it run on me 20 pips in the wrong direction. And that's insane if you think about it. But at the same time, when you're in it, it's so easy to do that. Or the other one I see lots of traders do all the time. They're in a Walmart trade, let's say, and they're up 5, 6, 7 pips. Okay, and then they let it run against them, and they take a 10-pip loss. Like in my head, it's sort of like, well, first of all, we have the 10-5-1, which means once you're up 5 pips, you get out with break even +1. But sometimes they'll even ignore that, and the next thing you know, they're taking a loss. Well, this method doesn't work; it sucks. Excuse my language, but But no, what you did was you weren't paying attention to what the market was telling you, and that's the thing. I'm not a big poker player, but I do like to go and play spades. And you play with, in the spades, you play with a partner, and you're not allowed to talk to each other when you're playing with your partner. But when you play with the same partner over and over again, you see what they do. You see what cards they lay down on the table. You see what their eyes are telling you, and you're able to go and really know what your partner is going to do, and so you're able to go and get the most bang for your buck, so to speak.
Well, don't you have a playing plan, game plan with your partner beforehand, and the way they put cards in, hold their cards, or don't you signal each other that way?
You're not supposed to.
Yeah, right.
You're not supposed to. You're not supposed to use any signals. But I can just go and look at people's eyes, like partners I've played with for years, and look at their eyes, and I know what type of player. I know they're an aggressive player, or they're not an aggressive player. I know what their look of fear is on their face, and I know by those sequence of cards that they lay out what they're going to go and do, or how they're in trouble, or how they're not in trouble. And the market lays that game plan out for you as well. You see things that happen over and over and over again, and you can just go and say, hey, this is what it's going to do. I took a trade this morning. This is before we got on the phone, where what I call my 3-bar play. And it's not really in my gameplay book. It's just not there. But I saw it, and I just saw the way it reacted, and I just jumped in and said, well, and I picked up a quick 5 pips on it. Why? Because I was basically reading what my partner, the market was doing, and I was able to go in it, go and take the trade. But as soon as I got my 5 pips, I banked it. Going back to a whole fold of bank, it's like, okay, this trade is usually only worth somewhere between 3 and 5 pips. Bank it. Get out. That's what my trade plan says. Get out. And I'm glad I did, because then it ran 10 pips the other direction.
Well, that's one of those experience things. It's just like somebody, not that they really challenged us, but they talk about look left. What does that mean? And it's like you guys say that, but you don't really explain it, or you can't really systematize it.
And that is something that really can't be systematized. Experiences can't be systematized. At least I don't think it can be. Now, you can go and take some experiences from it and write that down on a piece of paper. Hey, when we see this, don't do that. It's sort of like, that unwritten rule that you already alluded to. I see a 1 ball pop up on the chart, trade is running my direction. I see a 1 ball run up in front of me, and then the price movement stops, and it hasn't moved in 3 to 5 seconds. To me, that experience has told me, we're now in a situation where we got 50-50 chance here. It's either going to go my direction or it's not going to go my direction. Well, I got money that's sitting on the table right now that I can take and bank, and I only got a 50-50 chance. 50-50 chance means to me, get out. That's not good odds anymore. That's not, I don't have statistics in my favor anymore. Get out, take the money, and, be happy with it. It may go and continue running in your former direction, and you may even get mad over it. No, don't get mad over it. That's, you put money in your pocket. That was what the goal of the trade was in the first place, wasn't it?
Right, exactly.
And that's how you have to go and play it. And I think what happens is when you do it that way, you have a whole lot less head games going on. You got a whole lot less problems occurring where you start worrying about, what's the market going to do? Well, I like to say this all the time, and I say it to you all the time. I like to go and have, lines on my chart every 10 pips. Do I need them to add the trade? Nope, I don't. I really don't. I can see what price is. Right now, price on actually, I'm looking at the dollar, chief. Let me go over to the pound dollar. But right now on the pound dollar, we're sitting here at 1.4159. So my Walmart lines on this hour, we're at the 60 line for the short and 70. I can see that. I don't need to go and have a line on my chart. But do I have it there? Yeah, I do. Why? It gives me a sense of comfort. It helps me figure out what I'm going to go and do.
So hold on a second. You say you're short at 60 and long at 70?
Yeah, that's where mine are at.
Yeah, mine's long at 60 and short at 50. So you see, traders, this is one thing. You have to trade what you see because, your broker might not be the same as the next person. So like right now, if Walmart and if we were doing live trading here, he'd be going short, I'd be going long based on what each of us see.
Right, and the thing is, and that's also why you have stop losses because that's the thing, and a lot of times when my price opened up really really close to that 70 line, not 70 line, 60 line. So I probably would sit there and wait this out a little bit and see what direction it takes, and then wait for a cross back the other direction, or wait for it to get to the 5 line and wait, and then take the break of the 5 line or the previous high, previous hour's low or previous hour's high, and play it that way. The thing is that written up in the trade plan in the Walmart method? No, it's not. But that's what shows you that by looking left, seeing what's on the chart, by having some experience, having some game time, and that's what it is. Sort of, you go out on the football field. The coach may even call timeout, give the quarterback, this is what we're going to go and do. They get up to the line, and all of a sudden, the quarterback sees something. And he says, "You know what? I love my coach, but I'm doing this instead." And that's sometimes what we have to do.
Yeah, that's called calling an audible.
Exactly right. Call an audible at the line because sometimes that's what you have to do.
Yeah, but if you call too many audibles, that you might wind up on the bench because the coach is the coach.
That's right. And in trading, to be honest with you, you call too many audibles. What happens is you're inventing trades, and that can go in worse than putting you on the bench. You can go and end your trading career. So you need to keep that in check, as well. So. For new traders, I tell new traders this all the time. If you think you need to call an audible here, just don't trade. Wait till the next hour. Just put it on hold for right now until you get more experience under your belt and you're able to go and see those things. It's sort of like that trade I talked about a few minutes ago. When I went and took my 3-bar trade, I would never recommend a new trader to go and take that trade. That's you're out in the middle of nowhere. But the thing is, with experience, and you can tell where price is actually moving to, and then that all the idiosyncrasies of it. I need to go and get into the trade, have my finger on the close button, know that I'm only trying to get 2 to 5 pips, and be willing to go and react very very quickly once those limits are hit. In other words, either hold it, or rather, hold is not even on the table there. It's either I'm going to fold or I'm going to bank.
Yes. Hey, speaking of limits, we're at just about out of time. So, fellow traders, we'll do a part 2 or part 3 of this most likely. Just remember, when you're sitting in front of your trading platform. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.